So, hello and welcome to another episode of the ICC Academy Livecast, a new podcast series where we take a deeper dive into global business trends and ideas. Today's discussion is part of a joint initiative with the Asian Development Bank. I'm your host, Thomas Paris, and in this episode, we will discuss global sustainability trends in the banking sector, including those related to climate change, human rights, biodiversity, and what banks have done to respond to this new sustainability mandate. To help lead today's discussion is our moderator, Roberto Leva, Trade and Supply Chain Finance Relationship Manager at the Asian Development Bank. Roberto, thank you so much for helping us put this panel together. The floor is yours.
Thank you very much, Thomas. Hello, everyone. As Thomas mentioned, I work for the Asian Development Bank, and I'm one of the relationship manager in the Trade and Supply Chain Finance program. Together with this role at ADB, I am also the co-chair of the International Chamber of Commerce Sustainable Trade Finance Working Group, an initiative that has been running for the past few years to try and bring the trade finance industry towards sustainable practices in a broader sense. This podcast is one of the activities that we are looking at in order to bring forward the concept of sustainability even further in the trade finance industry. And I'm joined in today by two colleagues, Burcu Senel from HSBC and Mr. Vuong Thanh Long from the Joint Stock Commercial Bank for Investment and Development of Vietnam. The objective of this podcast is ultimately to raise awareness towards sustainability trends in the banking industry. This could be anything from climate change to human rights to biodiversity, and also to sync with the current trend of potential direction of investment of banks into sustainable practices. We want to take this chance to raise the awareness of ENS risk and opportunities for banks in emerging countries, but also for global banks. And we'll bring this to life through some case studies that we're going to bring to you. We want, in fact, to bring to you some best-in-class practices that global and local banks are applying throughout the world, for you to have some examples of what could be done in this very important area, which is sustainability. Now, I'll ask my kind speaker to introduce themselves and give a little bit of an overview of what they do within the organization. So, Burcu, over to you first.
Sure. Thank you, Roberto. I work in the global trade and receivable finance business at HSBC, which basically serves all of HSBC's clients from small and medium-sized enterprises all the way through large corporates and multinationals. And simply put, we provide trade finance and risk mitigation solutions to our customers all around the world. My role within this team is to lead sustainability for trade globally. And I'm also part of the ICC Sustainable Trade Finance Working Group, Roberto, that you're chairing. And I truly look forward to our conversation today.
Thank you, Burcu. Mr. Long, would you mind giving us a little introduction?
Yeah, thank you very much, everybody. And thank you for giving BIDV and myself the chance to talk on this ICC podcast. And first of all, I would like to take this chance to introduce about BIDV. We are the Joint Stock Commercial Bank for Investment and Development of Vietnam. Nowadays, we are the biggest commercial bank in Vietnam in terms of total assets, loans, and deposits. And we are also among the leading banks that have the most distribution network in Vietnam, with more than 1,100 branches and transaction offices covering all provinces of the country. We also have subsidiaries bank in Laos, Cambodia, and a Yangon branch in Myanmar. BIDV is proud of our well-established history with more than 63 years of operation that contributes to the Vietnam development as you can see today. and well known in Vietnam as a leading bank in terms of financing projects, being held 80% by the state. The bank, however, has gone public and has been listed on the stock exchange of Ho Chi Minh City since 2014. In 2019, KB Hana, a leading commercial bank in South Korea, bought 15% of BIDV shares and became the bank's first and biggest strategic investor, which not only pumped into BIDV the cash investment, but also give technical assistance and to BIDV to level up our banking technology management and performance. And my name is Long. I'm working as a head of the Foreign Direct Investment Corporate Banking Department of BIDV. At present, we are covering and monitoring the quality of relationship within BIDV with more than 5,300 FDI corporate clients in Vietnam, of which many come from Korea, Japan, Singapore, China, Taiwan, Europe, and US. And we provide a wide range of services, of course, from deposit, lending, guarantee, and also trade finance, etc. Yeah, back to you.
Oh, thank you, Mr. Long, for this overview of your bank. Well, now that I have you introducing your banks, can you also give us a little bit of an overview of what sustainability priorities by BIDV is focusing on?
Yeah, thank you, Roberto. First of all, we set the dual goals in our growth. We need to increase in both scale and also the quality of development. Being the largest bank in Vietnam, a country that has been one of the fastest growing economies in the world over the last 5 years, BIDV is responsible for working as one of the main engines to further fuel Vietnam economic growth. Just continuing to increase in scale is a need to meet the economic growth demand of the country. However, at the same time, we also learned painful lessons from other developed countries that have lost their sustainability due to the fact that they put more weight on economic growth in the past. Therefore, together with the government of Vietnam, BIDV is paying much more attention to quality development by maintaining sustainability right from the stage of our country development in our banking operation. And keeping that in mind, BIDV will work as a pioneer local bank in participating ENS programs in Vietnam initiated by the Vietnam government, G2G cooperation framework, and international organizations such as IDB, World Bank, and other multilateral ones. With relations to project financing and trade finance, we will continue to work with the World Bank, IDB, and the G2G framework on projects to support rural development, energy efficient growth, and advocate green financing. Within those frameworks, BIDV is strengthening its internal control for environmental and social risk management. The head office is producing guidelines and top management spreading messages about giving more priorities to financing sustainable sectors such as renewable energy, sustainable and high-tech agriculture transformation, environmentally friendly manufacturing. And also at the same time, we are more conservative on projects that may cause risky issues to environment, air, water, and soil, such as old technology, coal-firing thermal power plants, or importation of outdated machine and equipment. Thank you.
Thank you very much. And it's very interesting for us to find out what your bank is doing specifically in the jurisdiction in Vietnam and in the other geographies where you're operating. Now, passing on the ball to Burcu, I mean, we are looking from BIDV has locally geographical area of coverage. HSBC is a global institution. What are the sustainability priorities, Burcu, that you see within HSBC, and obviously considering the breadth of the geographies that your organization covers?
Yeah. So at HSBC, Roberto, we aim to be the leading bank for the transition to a net zero economy. And if you look at the market, there are a couple of internationally recognized frameworks that are aiming to tackle the challenge of sustainability. And if we, for instance, pick the Paris Agreement, achieving the goals of the Paris Agreement requires businesses and economies to undergo a fundamental transformation away from carbon. And this needs to happen at speed and scale, and in a way that balances environmental, economic, and social considerations. And banks now need to think of return on investment, not just in financial terms, but in terms of impact on the climate, society, and the natural ecosystems upon which we depend. And if you really think about the role of banks being the main intermediary between businesses, governments, investors, and the public, finance can make every aspect of this transition possible. So as you very, very rightly said, HSBC has the global reach, the network, and the expertise to lead in financing solutions for a net zero carbon future at the necessary pace. As a global bank with deep roots in Asia, we're uniquely placed to deliver true global solutions. And the most significant contribution we can make to a better world is supporting our 40 million customers, including 1.5 million businesses in 64 countries, to make the transition towards net zero possible. Specifically within trade finance space, our focus is mainly on supply chain sustainability. 80% of global trade passes through supply chains. And if we pick one sector, let's say consumer, in a typical consumer company's supply chain, it creates far greater social and environmental costs than its own operations, accounting for more than 80% of greenhouse gas emissions and more than 90% of the impact on air, land, water, or biodiversity. So therefore, we believe that supply chains hold the greatest potential for moving the dial to improve sustainability, which is the main focus for us within the trade finance space.
Thank you for this great overview to the both of you. Now, obviously, we are facing like a very big scope from both geographical to the product spectrum that we are looking at. Now, if I were to ask you, what are some of the key drivers of your bank's focus on the ESG, environmental, social and governance and sustainability issues, would you be able to sum up a few of the core ones for us, please? Maybe I'll let Mr. Long go first.
Okay, thank you. I think first of all, because not all the banks, especially some private banks in Vietnam, are so responsible and dynamic or proactive enough in this, protecting the environment. So that's why I think first of all, the strong legislation within Vietnam on social and environmental management, mandatory requirements set out by the State Bank of Vietnam, giving necessary requirement, building up a common platform so that no one can abuse, no one who are irresponsible in competition can abuse to make do harms to the sustainability. And secondly, I think the local bank self-perception, BIDV self-perception, our ability to build our own knowledge and self-responsibility, self-recognition of ENS, risky issues, given the rising importance of the matters in global context and in Vietnam development context too. Because now the environment pollution can trigger the non-performance of projects, destroying the sustainable economy in which BIDV and other local banks are just some of the stakeholders. And so that will ruin the lenders that finance, the reputation of the lenders that finance such polluted projects or outdated technology. And thirdly, I think for the banks in emerging part of the world, some political incentivized attraction, that is, more accessible fund, more concessional and accessible fund will be available to those financial institutions like us. That's so our willingness, our policy, and track records of growing greener, more sustainable. From the government point of view, some tax holiday, better treatment on risk assessment of greener banks, etc. I think play very important. Thank you.
Thank you very much. And how about from an HSBC perspective, Burcu, what would be your key drivers?
Sure. So HSBC wants to create a future in which economic recovery and sustainability go hand in hand. We have a decade to set the global economy on a pathway to a more sustainable, more resilient, more inclusive, and net zero carbon future. And if we don't deliver this collectively, we will face a significant loss to our economy, our society, and the natural ecosystems on which we depend on. And if you really think about the roles of banks, and especially HSBC with the scale and network that we have, there are three ways that we can support the transition toward net zero. So the first one really is we can support it through sustainable and transition finance. So we support our customers onto low carbon net zero pathways appropriate to their sectors, investing in sustainable infrastructure, providing responsible investment solutions. And if you really think about HSBC's commitment made back in 2017, we've actually committed to the market that we're going to provide 100 billion of sustainable finance by 2025. And we're already more than 60%, we already have more than 60% achievement in that commitment. The second piece really is by greening our own operations. One of the other commitments that we made to the market back then was we committed to source 100% of renewable energy by 2030 from our own operations. That's quite an important key driver for us as well. And the third piece really is by acting as an advocate and force for a systematic change in partnership with governments, regulators, NGOs, or other bodies like other industry associations like ICC. If you really think about kind of businesses have always existed to create value, but what constitutes value continues to evolve. So in the past, it was a little bit more narrowly measured in terms of pure profit, but in recent decades, this has broadened to measure total shareholder return. Today, the way that value is defined is increasingly becoming much more holistic, incorporating the full financial, social, and environmental impacts of a business from sourcing to production to disposal, or recognizing that supply chains are responsible for a big chunk of that environmental impact. So we really work with businesses to actually realize that value and to bring the wider societal factors that can inform financing decisions. For instance, HSBC has launched the first SDG bond in 2017 with proceeds ring-fenced for projects aligned to 7 selected goals, followed in 2018 by the world's first, so we launched the world's first SDG Sukuk, a Sharia-compliant bond. So all these reflect a significant shift towards sustainable investment. We also put efforts to improve the disclosure of risk-relating matters to climate change as well. So we work with industry bodies to be able to achieve that. So one example, Roberto, could be the ICC working group on capital costs. We're working across the industry, including the ICC working group, to develop a framework and consensus on capital treatment for ESG and trade finance. So as we all know, there's no differentiation for ESG lending in capital requirements currently, but we're trying to put the appropriate capital treatment that would recognize the risk profile of ESG, and work is already underway, thanks to your efforts as well, to create common definition of ESG criteria in the space and understand the risk profile of this type of lending, which will require improved data collection and analysis.
Thank you so much. And by the way, I take this chance to thank you and everyone else that's been involved in the ICC working group. Indeed, we are looking at different elements to try and push the industry forward in this very important topic. Now, HSBC is a best in class, and that's ultimately why we have you in today in this podcast. But can I ask you to maybe do a little bit of a comment around the sustainability trends in the banking space globally, beyond what HSBC is doing? Thank you.
Sure. I would like to answer this through the lens of our clients, because ultimately we're here to serve our clients and solve with them for this big challenge. So we're seeing increasing demand for sustainable financing. And we have recently published our Navigator research, which shows sustainability has become a higher priority as businesses seek to rebuild. There is a tremendous amount of increased commitment among businesses to build back better. So just to be a little bit more precise, it's 91% of the businesses agree that they need to reassess and review operations is much more important than kind of before, and it will enable them to rebuild their businesses on firmer environmental foundations. For around half of the businesses now see that sustainability is part of their core business purpose. So I think it's fair to say that we have moved from a nice to have in the good times to a must have. It's really integral right now on how businesses operate. Businesses also felt how well they were prepared throughout the pandemic. So if businesses who felt well prepared throughout the pandemic, they are placing greater emphasis on sustainability post the pandemic, coming out of it. And they also understand sustainability to be more wide-ranging than those who were actually less prepared. So the emphasis is really, really strengthening. The second element that I want to emphasize is the supply chain piece. So the supply chain piece is really important because supply chains will make the change happen. So 2 in 3 businesses seek greater control of their supply chains. So it's about 70% of the businesses. And transparency was the second most important change businesses are making to their supply chain after control. So 44% are seeking greater supply chain transparency, which will then enable sustainability and also resilience. The other very important piece is the businesses, 1 out of 3 businesses intend to make their supply chain more environmentally sustainable in the next 1 to 3 years. So if you pick off, for instance, the manufacturing of textiles and wearing apparel, leather, it places particular emphasis on making the supply chain more environmentally sustainable, which then leads me to the last almost kind of pillar where the companies are more and more responding to rising expectations amongst customers, shareholders, and society. We're seeing our data shows greater pressure from customers with changing behaviors and values being changed as well, suggesting that sustainability credentials are actually an opportunity to win new business rather than simply meet regulatory requirements. So pressures can come to become more sustainable from customers, but also from government regulators, employees, and shareholders, investors. And the last trend that we're also seeing is that the social elements being more on the rise, especially as we're all coming out of hopefully the pandemic and really aiming to build back better.
Thank you so much. Yes, indeed, like the focus on the supply chains and their transparency is becoming more and more relevant in the industry. And we do see also the Asian Development Bank desire for more corporates to have a clear understanding of every single step of the supply chains and the elements that the suppliers are applying in the production processes. Now, if we one thing that was made obvious by this pandemic is also how strongly interconnected the world is. Like supply chains now are truly global. Moving back to Mr. Long and to Vietnam, Vietnam is obviously a key manufacturing hub, and now he's supplying the country a lot of products to global brands. They operate across the world. So, Mr. Long, could you give us a little bit of an overview of what the situation is under these aspects in Vietnam, and maybe what the trends is, considering the key role that your country plays now in global supply chains?
Okay, thank you. First of all, I think all banks may be at different levels, but they are becoming better recognizing the rising importance of sustainability in the banking space. And secondly, I think more green banking and finance products and services will appear and be standardized in the future. Because all financial services organizations will have to adapt their services and operation to sustainability goals of the government. As a public awareness of ESG management is considerably enhanced, the need for financial institutions to increasingly engage in their higher social aims to support national and also international development goals means that their core business must be fit for a new world order. And all financial products and services in near future will have to align with global ESG management requirements. I'm talking about maybe in the future green bond and green insurance, green retail banking, etc. in Vietnam too. And I think that with respect to the trade finance, to enhance more sustainability in the banking, a commonly detailed criteria, instructions, guidelines in trade finance should soon be constructed. And maybe banks will be required to register formally to join and to meet certain levels of those criteria. And of course, thirdly, the higher transparency requirement on ENS reporting is very important, because being the driving force of the economy, then the financial sector is expected to play an important role in supporting national development goals and facilitate the transition to a greener and low carbon economy. Therefore, higher standard and transparency on ENS requirement among financial institutions will have to build up and reflect the sustainability activities, and that is a must. And because we think that since the level of perception on sustainability development in Vietnam still variously different, so I think this is a unique niche of Vietnam, but local banks here will need to quicker and collectively level up their knowledge of sustainable development goals and requirements, and also need to link their governance to sustainability. And in this sense, I think both the S and G, letter in the ESG, becoming more important and need being placed more attention by the local banks in Vietnam.
Thank you. That's really interesting. And as you know, I mean, the Asian Development Bank has been working closely with your organization. And in general, like, we are there to try and help good examples such as your bank to be seen as, you know, a role model for other institutions in Vietnam, but also in other emerging markets, for us to spread best practices. And well, first of all, thank you for being a best in class and in this specific topic. Now, moving from theory to practice, at the beginning I mentioned a potential case study that we wanted to bring to the audience. Now, Burcu, can you bring us the example of a solution that you structured with one of your top clients for our audience to kind of understand how things can be brought into practice?
Sure. But before maybe I go into the case study, maybe I'll just a little bit elaborate on that co-creation kind of aspect and the approach that we're taking. So we're seeing clients making bold commitments to reduce their impact. And we have been dedicating ourselves to providing financing solutions to sectors facing fundamental transformations and to supporting next generation climate innovation to scale. And with the global insight that we spoke about and expertise and network, it's really well placed to be able to support those emerging markets in their transition. What we actually, like the approach that we're taking is we work with our clients globally in over 60 markets to transition their business, and we align our client coverage with the ESG priorities to place sustainability at the heart of our solution. So we basically start a discussion with our clients on their sustainability targets, understand the challenges that they are facing, and then build bespoke solutions with them, often to address those specific challenges. And sustainable supply chain solution that you alluded to, Roberto, is actually a very good example of this co-creation. We have provided, we have a sustainable supply chain financing offering, which offers working capital finance to suppliers with pricing differentials based on their sustainability performance. So it does help the supplier to initiate actions to achieve measurable sustainability performance improvements. And the case study that I just want to allude to is with Walmart. So we have a sustainable supply chain finance program with Walmart, where we are pegging the supplier's financing rate to the sustainability performance of the suppliers. The suppliers are assigned ratings based on a predetermined set of sustainability criteria determined by Walmart under Project Gigaton or Walmart Sustainability Index program. And the suppliers that improve their sustainability ratings can obtain improved access to trade terms and financing rates. But if a supplier does not satisfy the sustainability criteria, it can then join the Sustainable Supply Chain Finance program at the base pricing. It's just one of the examples under the Sustainable Supply Chain Finance kind of program kind of theme. But we also have other examples how we've co-created with our clients to drive a lever to provide financing as a lever to drive change. Like, for instance, we have provided our first green loan in Canada for concert properties development of a highly energy efficient, low carbon residential property in Victoria, British Columbia. We have provided our first green trade loan in Hong Kong towards the end of last year to a property developer, Paul Y Engineering Group, for the construction of a green student residence at the University of Hong Kong. We have another example would be a sustainability linked loan that we provided for sustainable technologies manufacturer Johnson Matthey with targets on renewables, workplace safety and culture as KPIs.
Thank you so much. Thank you so much, Burcu. These are very interesting examples, and it's very good to hear that out there are more and more initiatives to try to give more value to those clients that ultimately are trying to move towards sustainable practices or improve their current sustainable practices. Now, to understand, we have specific cases, they are growing. Also at Asian Development Bank, we are looking at how to further support this type of practices. But can I ask to both of you, what do you think are the barriers or potential enablers that we have in the markets for or against the further growth of sustainable trade finance? Can I please ask Mr. Long to go first?
So, in our opinion, first of all, the lack of globally accepted taxonomy and definition of sustainability is a fact. We think that there is still even widespread disagreement among experts on definition of the sustainable economic growth, environmental and social and governance, or sustainable trade finance. The controversy has not only contributed to the lack of common metrics for measuring sustainability, but also has created confusion in aligning best practice across the globe. The organizations like ICC, ADB, etc. should take the role in cooperation with government authorities to give the global definition and criteria of this sustainability. Also, the barrier, we think that still there is a lack of consensus why certain regions are more conducive to sustainability efforts, the other do not. For example, we know that in Europe, governments are normally focused on prioritizing sustainability, encouraging all the parties to align accordingly. However, in other regions, even some developed ones, there is noticeably less engagement. This situation may originate from the lack of a uniform criteria of sustainability, but due to we think that the primary intention of actual government as well. For example, very sad but even very big one like US, they withdraws from the Paris Agreement on climate change mitigation. And thirdly, as a matter of fact, emerging markets are the part of the world that relying on industry that are less friendly to environment. That is one of the barriers. Sustainability is not yet a top priority in emerging markets in a way that many economies rely on less climate-friendly industries to foster growth at lower cost in the short term. Unlike more developed economies, many emerging markets do not have the means I mean, their financial or technological or managerial capacity to shift their supply chains to make environmentally conscious decisions. No, or they do not have a robust political support for sustainable practices. And I think for Vietnam, still there is a lack of public awareness of benefits and framework of sustainable economic growth in the SME sector. In fact, the small and medium enterprises are taking an important role in Vietnam economy, making about 90% of the number of the registered enterprises in Vietnam. However, the awareness of sustainable economy in general, and also sustainable trade finance in particular, is limited because most of the enterprise has no practical framework for conducting the E&S management in its business. And though the sustainable growth target has been promoted by the government of Vietnam, but it seems still there is a lack of comprehensive mechanism and framework or more standardized regulation from the government level to conduct ESG management in our banking sector. We still observe the mismatch or gap between government agencies in appealing for sustainable financing and real or specific incentive policies to encourage the banking community like us to promote more ESG framework into work. And that's what we think. And by improving those, I think, barriers, we can turn those barriers into the enablers to help the country, the economy, to develop toward more sustainability. Thank you.
Thank you very much, Mr. Long. Burcu, what is your view on this point?
Yeah, so I would potentially echo a little bit, Mr. Long. I completely agree, and maybe we should just give a positive spin as well in terms of kind of really talking about the biggest enablers. And in the absence of those, obviously, they will be kind of the barriers that we're facing. So for HSBC, the biggest enablers that we're seeing are, I would say threefold, right? The advocacy, the partnerships, and technology are the biggest enablers that we would like to see more. So on the advocacy side, we discussed that we have a responsibility to use our global network, scale, and influence to advocate for positive action on climate change at a systematic level. And we also spoke earlier about how we need multiple parties to come together. So business and government must cooperate in a truly global effort to define common standards for disclosure, measurement, and analysis of climate issues. So that's definitely a barrier we need to overcome to ensure that we enable it. The second piece really is the kind of the partnerships. If I really look at the universe that we have right now in the market from a sustainability perspective, it's massive. So we have sustainability certification providers, we have rating agencies, we have education, nonprofit entities. We have very different typologies, I would call, like in the market. And we really need to play a leading role in bringing these coalitions together. That's very, very important. And there is clearly, Roberto, a very important role for ICC to shape the standards and lead this advocacy effort and help us to bring the coalitions together as well. The last piece really is the technology piece. We believe technology is a key to drive greater sustainability, especially in the supply chains. We spoke about the lack of transparency, but the increasing importance. And if you really think about the digitization of trade finance, using technologies like blockchain or tokenization, which made huge progress in the last couple of years, they have a tremendous potential to promote sustainable supply chains. So by embedding track and trace within multi-level supply chains to assess different sustainability or environmental factors, we can actually enable, with the help of these technologies, greater transparency, which can then result in greater financing solutions and hopefully deep-tier financing when it comes to the underserved kind of SMEs.
Thank you very much to both of you. Now, it's indeed the ICC, for example, as Burcu mentioned, it's highly committed towards this important topic. We have multiple commercial bank, multilaterals, and several types of organizations involved into setting up the best control for sustainability, looking at trainings. For example, this podcast is part of what could be a training initiative. We are looking at potential incentives, and as Mr. Long mentioned before, also we are trying to look at how can we build up a unique set of definitions that can actually help everyone, quote, quote, speak the same language when discussing about sustainability. On the other end, at ADB, we are there to ensure that no one is left out. Obviously, throughout this podcast, we talked about how supply chains are becoming global, how certain realities that impact a specific countries such as Vietnam do then replicate and impact global organizations. You have the roles of multilaterals there to ensure that no country or organization that is willing to understand and commit toward this topic is left behind, and that we give them the tool to understand what are the best practices and for them to be able to talk to the best in class, such as the two organizations enjoying me today, to kind of fill in the gap and be on top of their sustainability aspects. Now, I take this chance to thank both Mr. Long and Burcu. Thank you very much for joining the podcast today. Thomas, shall I pass on the ball next to you?
Yes, unless there's anything that the speakers want to close on at this point.
It will be good to emphasize also that what we really need is to widen the conversation. We discussed that it's a multiplayer game, and we really need the multiple kind of parties to be around the same table. And we really want to be, as a bank, to be challenged and be brought to that conversation as well. So we really want to be on our client side for the long term on this journey. So for us, everything starts with a conversation. So we really want to more and more engage with the CFOs, the treasury teams, the procurement officials, the sustainability officers, really widen the conversation and be challenged to work with our clients to co-create.
Thank you so much for your time. As a reminder, we are hosting live broadcasts on this topic in addition to other trade topics like the Incoterms rules, cryptocurrency, leadership coaching, and many others. So sign up on our website for free and subscribe to our YouTube channel. And ladies and gentlemen, this has been another episode of the ICC Livecast. See you next time.